27 December, Tuesday. Alright, welcome back from the long holiday. Now, apologize for today if the voice doesn't come out well because my mic has some problem. But nonetheless, is inflation going down or more upside to go? I think this is something big here because many people now is complaining of the prices going up. I mean, I'm pretty sure in Singapore, the prices of food is going up. Alright, and we're going to approach Chinese New Year, and usually the food price will go up by another 10-15%. Alright, so would that actually cause more problem for us? I'll come to this later. Alright, once again, thank you AIMS for the kind sponsorship, and also make sure that you do your risk assessment. Yep. Okay, right. Is there a Santa Claus rally coming in? Well, we saw that on Friday. The Dow Jones went up by 106 points, the Nasdaq to 30 points, S&P 500 up by 22 points. Basically, some selected stock was up, like Amazon, like Berkshire, like Google, but Microsoft and Apple didn't really perform well. That's interesting. And of course, Tesla continued to fall. This is actually a very, very big thing. I'll cover this shortly, alright? So what actually could lead to a Santa Claus rally? Well, this morning we have a good surprise. Apparently, travelers to China now will not need to quarantine from Jan 8. That means that they don't need to be put under this hotel quarantine because there is no longer needed, apparently. All right. So according to the National Health Quarantine Law, infectious disease quarantine measures will no longer be taken against inbound travelers and goods. Okay, they just need to take a PCR test about 40 hours before arriving in China, and they're done. Okay, so it's very big different from what we saw just a couple of months ago. And the thing is, this very interesting from the South China Morning Post. It seems that China has a potential grim COVID death toll to about 1.5 million deaths in 6 months. So, okay. So seemingly that their approach is that they are okay with the deaths, and they really want to open up the economy. So if that happens, the biggest economy, second biggest or biggest economy open up. So what will happen to the stock market? Well, most likely it will go higher. But the thing is we all know that it will have to go down through a phase of first wave and second wave that will hit the whole the country, and then after that the recovery stage will come in, and of course that's whereby everybody will go back to work. So all this thing tells me that maybe by March onwards itself for 2023, the market will see a nice bottom out, and of course that will lead to a good rally. All right, that's how I feel it for the time being right now. And of course, you can also see from the US inflation gauge, apparently the PCE data has actually come off a little bit, okay? And that could actually be another reason why that the combat against inflation is doing well. But the thing is that even though the numbers are pretty low at the moment right now, and it's like definitely lowest compared to the last few months, but the thing is that is because the energy prices has been coming off. But then if you look at it carefully right now, the oil prices are actually bottoming out at about $70, and that's a price whereby the Biden administration is looking to buy back for their SPR. So all I can say is that it seems that the market is now very comfortable with what's going on now, but it's still very far from the level that Jerome Powell and friends wants. So of course, if the interest rate is helping to bring down inflation, then the question is, the current inflation rate right now, right, is it damaging to the economic earnings and future earnings? That is a question that I'm actually looking at. So if you look carefully right now on the screen here, you will actually notice a few interesting stuff. Let me just bring it to you. All right, this is the S&P 500 in the candlestick versus the CPI data. So of course, we saw the CPI data went as high as 9.1 right here, okay? And currently now it's at 7.1, okay? All right, got it? Okay, so we look at the past for the last 20 years. Now, it seems that whenever, selected of course, whenever the inflation, the CPI data start to peak, right, by coming down, as you can see on the screen right now, you notice that the stock market also come off. Interesting. So it happened again back here, whereby the PCI data went up to about 5.2, 5.3, and of course the stock market also came off. And of course we continue to do that as well, right? We can see that almost every other time you can see the similar pattern. So the question is, if the inflation is really coming down based on what we are seeing right now, does it mean that it's a good time to buy into the equity market? Now, I seriously think no, because history has proven that the stock market will fall. And then when that happens, that is whereby you should wait for a while, let the price come off a little bit more, right? if it's possible, a capitulation happens, and then that will be a better time to buy. And of course, looking at the weekly chart of S&P 500 right now, we still got a bit of more room to go before we actually get the so-called oversold signal. All right. So this is one thing that you must understand, because at the moment now, imagine if everybody is comfortable right now, and let's say a plate of a noodle costs you $5, and people are paying for this to you right now as a hawker. That's good because you're earning money, right? But if the thing is that if inflation really starts to come off, right, then what happens is that your earnings will also come off. Do you think about it? Yes, indeed. So when prices come down itself, but the cost to it doesn't really come off, right? Because labor cost, rental doesn't really come off that much, then your earnings will reduce. And when your earnings reduce, then what happened? Yes, definitely, that means that you will not be enjoying as much as you can. So when inflation comes down, right, it will actually be a bad thing for time being before people see the value of it. Okay, got my point? So that is one thing that to take note of. If you see from my chart itself, is pretty clear. So there is another reason why there could be a Santa Claus rally, because the US House passes the 1.7 trillion bill to the fund 1.7 trillion bill to fund government through September. Okay, so they pass it because obviously they got more people in the party. All right, but the question is who's going to take the tab? So we all know that the current situation now is that the Federal Reserve has slowly reduced their their balance sheet, right? As you can see on the screen right now. Let me take a look. Right, they are reducing from $9 trillion, almost there. All right, and brought it down to current 8.5 trillion. So by doing that, that is good. But now if they're going to put in this 1.7 trillion back into the market, which means almost the Federal Reserve going to be the one buying, because many countries now are not going to buy this anymore. And what do you think? So what happened then? Okay, so that's why I feel that, right, if this were to go into this, oh my God, then whatever the Federal Reserve have been doing is going to be wasted. All right, so of course, again, I couldn't find much information where the money come from, but most likely the Federal Reserve will pick the tab. All right, so now we have a big issue, guys. So we can look here from year 2002 onwards. Okay, we can see that when credit, that means people start to borrow money. All right, you can see that, and if credit is going up, people borrowing money, and then saving is going down, usually the big R will appear, which means recession. Okay, so now what we have is the same thing right now, that when the credit went up, okay, right, and saving goes down, you have a recession. Okay, that was a pretty fast one, less than 4 months, but still it was a recession. So the question is now, the credit utilization itself is much higher than pre-COVID, and it was much higher than the pre-Lehman. All right, think about this right now. And the saving rate, oh my goodness, the saving rate is worse than this 18, and it's about the same level as what we have back in 2008. So now take a look and compare this. If the credit utilization is much higher, while the saving are about the same rate, then what do you think will happen? Definitely, in my books, a big recession is coming in. All right, so all these things tells me that we need to be very careful as we approach 2023. And of course, if you look at the MOVE index, which is actually, it calculates the future volatility of the US Treasury yields implied by current prices of options on treasuries of various maturities. Implied volatility can be seen as a measure of the cost to insure against outsized interest rates move either upwards or downwards. So simply put itself, you look back again in 2020, that was when the MOVE index was at a high level, and then it plunges. Then we had a similar thing happen back in 2022. All right, there were many spikes that doing this, but of course we can see that it is basically having a huge headwind right now. And of course, if this turns down, that means bond prices can go down. And recently we saw the 10-year yield going up. I'll cover this very shortly. And if 10 years is going up right now, then that means that the bond price is coming off. And if bond price comes down, that means that people are not comfortable with the current situation right now, and probably they want to take profit on the bond recent gain. And when people do that, think about this, that means that there's no confidence in the economy. So all these speaks for itself, and I think that you should be very careful. Now, one indicator I'm using right now in a very different way is the AII bull ratio. Okay, so you can see that when the market is bullish, okay, every time when it touches this index at 30, it almost instantly create a updrive, okay? But as like RSI, if let's say it's said to be frequently at the bottom, now that is not a good sign, because that is when the price goes down and it stays downside. That means that there will be more selling, right? Got the idea now? Okay. So when the market was back to bullish again from 2012 onwards, when it touched and go, you can see the market was very bullish. So what we had is that before the crash off in 2018, you can see that there were multiple touch base here, and that actually warns us before the market sell off. And of course, when the market was coming down, you can see that the numerous touch over here. So the question is this right now, guys, take a look here. This whole area here now is 2022. This is probably the largest area of concentration of the market touching below the 30 mark. Okay, since 2002. And if that is going to tell me that this is actually bullish, I ain't going to beg to differ. So in fact itself, right, I feel that there could be a potential capitulation in the near term, maybe the next 1 to 2 months time. And then when that all happens itself, price valuation is at the low end, and when everybody say, okay, let's stop it, no more buying, and people just give up, I think that will be the best time to buy into the market. Okay, all right. So you look at it, Tesla right now, there's one being asked is that what can we do with Tesla? And I've been telling you guys 120 is still my target. Now, if you look at Tesla since 2019 until now, all right, we can see very clearly Tesla has a so-called technical point whereby it actually, called for a buy. It went up a little bit more, but sorry, I think this is wrong chart here. Let me just correct it a bit. Give me just a moment. I think that's wrong on my side here. Just give me a moment here. Okay, I just need to correct this. My bad. Okay, here we go. All right, so this is the actual one. Okay, sorry. Earlier itself was some technical. Okay, here we go. Clear the screen up a bit. Okay, so this is what we have right now. That when the last time in 2019, when May, where the RSI goes to 30 on the weekly chart, all right, you can see that that was where the Tesla bottomed out before it rallied. Okay, so that is during a good time. But now we are back down to the same point here, as you can see on your screen right now. Okay, same. So of course, on technical ground, we should see a rebound in the near term. But again, I'll stress this. Technically, this is a buy. But when the market is a downtrend, even technical chart can really show you that it can go lower. So I still stand with my ground at 120 for the first support. But there are people now looking at 100 or even 75, okay? So all I can say is I'm not bullish on Tesla at the moment right now. I do expect a technical rebound, but to me itself, this is just going to be a touch and recover. And then again, it may continue to fall further. To me, it's all right. If 120 can't hold, then the next target could be very, very easily at about 90 in my books. And of course, lower than that itself could be as low as 75, okay? But again, I think that at $90, there's going to be a bit of breakdown in the market, because that means that some margin calls will happen. Now, recently, we saw the volume has been picking up. I suspect that some of the index funds are actually liquidating Tesla, because you understand this, they bought a lot of Tesla as part of the index fund. And if the Tesla share keep on coming down and there's no reprieve at the moment, and the current situation in China is not doing anything better than that, I think that could actually spell trouble. And of course, with that, we can buy it at a lower price. So you can see that this is what happened during the day. We can see the market rebounded during the day itself, but after that, with huge volume coming in, there could be some buying, could be category buying, but very, very fast, a heavier volume came in to dump the stock. Now, this is very clear that it's a pump and dump exercise. Now, that of course, towards the end of the day, there was a huge volume coming in. Not too sure what's happening over here, but to me, it's every transaction is a buyer and a seller. So if you're telling me there's a lot of selling coming in, that also because a lot of buying coming in. So we'll take a look here. So I gotta stand my ground. It's at 120 is the first base. Hopefully it stays there. It may do a technical rebound, but that's about it. All right, that is on Tesla. All right, so with that, let's just look at the chart right now and see what we have to offer for you today. All right, so first of all, this is my Dow Jones with my KFC level, and you can see very incredibly this particular support at this 33,031 has been a very strong base support at the moment right now. So as long as the Dow Jones stays above 33,031, there's no need to be a concern for, okay? Then of course, in terms of the Nasdaq, as you can see, it has lost the KFC level from at this point, pulls back incredibly. It stopped at the KCB level perfectly. So as long as the market stays above OP today, it's a doji. So the market may rebound to this area. So it may due to Tesla. But if Tesla really breaks below 120, then of course this thing coming back down again here to 10,820 is actually very, very possible. All right, that is on the KFC side. Let's look at our Dow Jones for today. Now, the Dow Jones today is a CCRY positioning for TWB student, so by right should be on the upside. But just gentle reminder, this is a zebra, red, yellow, red, yellow. If it stays up, good, okay? It may go back to 33,582. But on the flip note, if the market turns red later on and breaks below MLP, I can pretty confident to say that the market can come down all the way back to the BNB support level here, and that's 32,570. All right, so upside is 33,582. Downside will be here itself at 32,560 area. And for the Nasdaq, let's take a look right now. The Nasdaq did a single yellow pump and dump, so by right there should be some selling, but very incredibly when the market was dumping off, my indicator turns green, so that means that there was some buying coming in. Some people have been buying at the bottom around this area, and it's proven by my indicator. So but the KRW, the weightage is on the downside, so we have a mixed direction here. So very simple, because the Nasdaq today, the pivot one is 11,020. So as long as the Nasdaq stays above 11,020, it should be able to go back up again to 11,255. But if the market breaks below 11,020, then the first support will be at 10,967. This must hold, okay? If not, the selling can bring it down all the way to 10,685 for today. S&P 500 right now, it has gap up this morning because of China news. So as long as the market can stay above 3883, we can see a rebound. All right, KSI and KW are smacks. And at the moment now, as long as it stays above OP is fine. But I just have this feeling that it has to stay above OP, because if not, the recovery gap back to here itself could be drastic. 38.34 will be my MLP level to watch for this particular counter. Now for Nikkei, as we can see this morning, Nikkei gap up. And we have been saying that if the Kuroda take on this non-interest rate is real, then of course the Nikkei will rebound. But you can see what we have here. The market rebounded to the BNB RL level, couldn't stay any higher, pulls back. And my KSI shows that the market is actually selling. The bonds are actually selling, although the weightage shows another direction. So if you were to ask me, the market just have to watch this point right now. If the price comes down, 26,199 will be a pretty strong support, okay? Now, Hang Seng's closed for holiday today. I'm going to skip this. Let me bring in DAX to you right now. Now, for DAX, okay, just a moment. Yeah. Okay, maybe just do me a... Okay, you can see DAX. DAX later on is all going to be open, and the BNB support level will be somewhere around here, and that's about 13,830 plus. KSI and KRW both are actually on the red side. So if you ask me, if DAX gap up later, it must stay above the MLP, which is not ready yet. But once it pulls below it, right, the selling may bring it down to the BNB support level. So watch out for this. Now, crude oil, as I mentioned, is marching up. Look at it. Now, crude oil came down all the way to the BNB extension level at $71, right? Okay, then the boys came in to buy. And of course, you can see that periodically when indicator gives the two confirmation bar, and of course, you can see crude oil mounting up. And once it crossed the BNB support level convincingly, you can see it's marching up very nicely. Now, today's pivot one is at $80.99. And very incredible, the day high of today is also $80.99. It's almost like the market reads it as if we know it. That is how crazy the pivot is. And of course, if the market can break above the $81 mark, 81, 87 should be easy. If not, right, it may go all the way to the BNB RL level, and that will be at 82.72. Now, just take note of this, yeah. Now, the crude oil coming down, that actually helped the PCE data. It helped the inflation coming down. But if the crude oil price goes up, as we have been saying, right, most likely it will. And if it crossed up to $88 or even higher, that will actually create another fear into the market that inflation will go up again later in January and February, and that would not be nice, because that means the Federal Reserve will have to do more to basically curb inflation. So watch crude oil, but if you ask me itself, right, crude oil is about to bottom. In my opinion itself, right, crude oil is about to bottom, because if you look at the chart in long term, using the most conventional chart, you can see right now, oops, not too clear, let me just change the chart color, just give me a minute. Here we go, better. All right, so we are very near to the very big breakout period. If the market breaks above $83, we could see a strong recovery upwards. And if that happened, you can imagine that the Federal Reserve is going to jump. Okay, think about this, all right? Okay, so that is the crude oil market. And all I bring to you now is what I just promised you regarding about 10-year yields. So let's take a look right now. All right, the 10-year yield, if you can look at it at the screen here, you can see that this is the 10-year yield. Yeah, change it to the day chart. Okay, bring it down. You can see that the 10-year yield is really pumping up. Okay, look at it. Now, remember I told you that 3.4% is the very critical support level, and we can see the market purposely touches it for several times, and I was pretty bullish. I was saying that the market, most likely the 10-year yield will go up again to 3.6, and truth be told, in 3 trading days it went up. And now we are at a very important cross line whereby it has to stay here below the 3.75 mark. Anytime if you go above 3.75, the next target could be 3.9, and again that will spray fear across everyone's, and that will bring the equity market a bit lower. All right, so be very, very careful on this. And as I mentioned again, if you look at the bond market right now, the bond market is coming off, and you can see that it's jumping down literally. So usually bond prices come down rather steadily, not in this manner. So what could only happen? Maybe that people are getting worried, or they're taking profit. But if they're taking profit, there's no way to in such a hurry, right? So it's more like funds are dumping it right now. And the only reason for that itself is fear that Federal Reserve may have to do more, or people are not very confident with the US bonds. And that is the scary part. Okay, let's look at the gold market right now. And silver. I'll do some silver first. Silver is mounting up very nicely. Silver, the pivot one today is $23.76, and it has stopped perfectly. The low is just touches it beautifully, and now it's up, and it's going to challenge the $24 mark again. Now, my target for silver is $24.86, and I'm pretty sure that this time around it should have the strength to go towards there. Now, the question you may ask, then how about the dollar? Isn't it the dollar is going up? Not really. If you look at the dollar right now, if you take a look at dollar, the dollar is coming off. Interesting. That means that the bond prices is coming down, yield is going up, but the dollar is coming down. So the only way to explain this itself right now is because people are pretty fearful of that. This is not enough. That even though the Federal Reserve may hike rates, right, the dollar may not be in the need or demand. This is scary. This is actually very scary. So be careful on this. This is not going to be nice if whatever I just said really, really happens. All right. So that's something to take note of that. Yeah. Okay. Then look at the gold price right now. Let's take a look here. Gold price now is challenging my BNB RL level at 1810. I think that gold may break above 1810 and may actually go to 1854. But because the dollar now is coming down, that will pressure gold go higher. Now, if let's say we don't talk about what I just mentioned, if really there is some problem in US market and the boys know it and they're dumping the bond, now think about this. That means that if there's nowhere to go and the safe haven now is to buy gold, the gold price may actually go up all the way to 1854. Now, the KSI shows that the boys are still dumping gold. Interesting. But my KCX shows the other side. So if you ask me, right, let me just bring to you somewhere back early, probably last year. Okay, you can take a look here. Now, you can take a look right here itself, whereby the KSI was red in color and the KCX was also blue. Alright, but once you can see that the KSI and non-blue is in, the market went up, right? Okay, so we should watch it here again. Now, this is where the KSI was red and the KCX was non, that means it's bullish, but the KSI is not given the go ahead. But once that is over, when the KSI turned green and it combined with the KCX, oh my goodness, look at gold. It just shot up all the way from this point here all the way to 2000, and that took 15 days to go up quite a fair bit. All right, nearly about $300. So if you ask me, I think that gold price may do the same thing, and because that is such a strong consolidation on this period right now, I felt that something may really happen. So traders, watch out for this, yeah. And of course, today for gold, the pivot one is 1799, so it's a classic buy too. Okay. Okay, let's look at the last two will be the Bitcoin and Ethereum. Now, Ethereum is trying to find support. Okay, this is the resistance now, the new BNB. There is a strong resistance at the MA30 at 1231. Hopefully it breaks, then maybe we can cross 1239. But if not, it's out, it should bounce around here. But undeniable, if the dollar is weakening, usually that will help Ethereum and Bitcoin trade higher. Right? Something that we must take note of that. All right, there's something. Let me just miss out my Bitcoin. Let me just bring it in right now. Okay, just give me a moment. Let me just bring this in. Here we go. Okay, I think there's some little error there. Let me just bring it in one more. Okay, here we go. All right, so we can see that there is a strong resistance now for pivot 1 at 16,933, and if the market breaks above that, it will touch the BNB RL at 17,000. Okay, watch out for this. KSI and my KCX is a bit mixed at the moment now. Blue means that a bit of bearishness, and KSI green means bullishness, so a bit mixed at the moment. So if you ask me, the better bet could be gold versus the cryptocurrency. All right, hope you enjoyed this session. This is Cal signing off. I'll see you again tomorrow. All right, take care. Bye bye.